I believe we are about to see another engineered price hit on the precious metals markets, quite possibly this weekend. Thursday night, we're already seeing metal weakness in the metals starting today. Miners are responding to that weakness. This is very similar to the big price hit that started at silver peaked at 118 or so, and somebody sold 5,000 silver contracts in the space of less than 2 minutes. 5,000 contracts. It's 25 million ounces of silver, paper silver, sold in the evening session where the volume is the lowest volume of the day. And so anyway, and that spurred that Thursday night big sell order, kicked off the cascade of algorithmic selling, retail investors freaking out and selling. And so anyway, we may be about to see the same thing again. Let me stop rambling. And then from I'm a technical analysis kind of guy, but there's another aspect to the financial markets, and it's kind of from a warfare perspective. It's the buyers and sellers duking it out in the marketplace. Put up your dukes. And so from that perspective, Sun Tzu and the art of warfare offers potential value is some of his philosophy. And so in this case, in my mind, it's strike when your opponent is weak. And as we look at the charts, that's what I believe. To me, that's what we're seeing, is that right now, if you and I, were trying to manage, air quotes around manage, the precious metals markets, now would be the time to strike. The markets, actually, the markets are quite strong. It's all relative. But now would be the time for another price strike, sell another 5,000 silver contracts. And I think the objective will, with this next price strike, don't know if they'll accomplish it or not, but I think their objective, if it were me, if I were the guy pulling the strings, selling paper silver contracts, I'd be shooting for 48, and I'll show you why in coming charts. These are the mining stocks. In most of them, we can do, here's G-Roy, Hecla. We see these steep down-sloping trend lines. And so, by that standard, we could start to think that this correction was over. We get this big downward movement, and then price breaks back above it. On the other hand, these moves are too steep to be sustainable. And so with a price move like this, whether the move was over or not, it's reasonable to expect some kind of bounce, just because that's too much price movement in a short period of time. Doesn't mean that the downward movement is over. What we haven't seen, or what I haven't seen here in the mining stocks, I hate to even say this, but a capitulation sell-off. So far, and the key in my mind on a capitulation sell-off is I want to see big price movement and big volume, and of course on a down day. And so far, so far we're seeing exactly what we would expect to see in an uptrend. Here's volume. In an uptrend, we want to see volume rise as price rises. And so if we focus on Hecla, that's exactly what we've got. Here's price going up, volume rising. Now we get a pullback. And again, remember that the primary trend is to the upside. And so on a pullback in an uptrend, we want to see volume fall off. And that's exactly what we're getting. And again, the key is we have not gotten a high volume sell-off in the mining stocks. There's still too much excitement, too much exuberance, in my opinion, in the precious metals sector. They engineered a big price hit. Silver went from 118 down to 64. It's a huge price change, but a very short period of time. And I'm very leery to think that this price correction, and it's not, in my opinion, it's not an organic price correction. It's an engineered price strike. They're doing everything they can to break the price of silver, and they're not having any luck in either the West or in China. China's evidently got a physical shortness issue. It's just, there's not enough silver in the world, folks. We don't pull enough of the stuff out of the ground. I don't want to get on my soapbox. So I was looking at just miscellaneous charts, trying to get an idea. It's like, okay, what's going on, or what might be going on? And I always like to go big picture. And so this is 6 months. So every price bar in this chart represents 6 months of time. And then it's this thought, whether you're talking about real estate prices or stock prices or silver prices, whatever it is, financial vehicle, trees don't grow to the sky. That it just doesn't happen. That's not the way nature works. Typically, this is the whole Elliott wave principle, is that, a couple of steps forward, 2 steps back. It's the organic growth doesn't happen in a straight line, certainly doesn't happen in a parabolic. Trees don't grow to the sky, basically. And so anyway, we see a big price bar in silver, and again, this is 6 month time frame. What's silver gained? $5? No, there we go, $35. So in 6 month time frame, silver essentially doubled, gained $35 in 6 months. That's exciting. That's exciting price action. But again, trees don't grow to the sky. There's no support. Where is it from? And now I'm back on my technical analysis perspective. Where is the support for this price move? And it doesn't exist, because we just got this one big price bar poking up out into blue sky. And so ideally, as much as it might be painful to sit through a big pullback, ideally, we'd like to come back here all the way to 48, test this for support, and then let price go off and do, there's no doubt in my mind, folks, silver's going to multiple hundreds of dollars per ounce. The only question is the first number a 2? Is it a 4? Could it be a 6? But, patience. Patience is required here. So anyway, 6 month, and then I was asking myself the question. It's like, okay, how deep do we have to go down into the time frames? How small a time frame do we have to go to start to see hopefully some support at that $48 level? There's a little bit. This is 3 months, and so we can see there was there's resistance. So we got resistance, retest, and testing that resistance level as support now. Let's keep going. So now we're down at the monthly level, and again, same thing. Sorry for zooming around. So resistance, poking through, retest, off to the races. We'll go one layer deeper, and so weekly. So, here at the weekly level, we did get a pretty good test of that, 48 as support. And this is a big spiky parabolic price movement. after that, somewhat, it's not insignificant. We're in the weekly time frame. I mean, that's a pretty good test of $48 as a support level. It'd sure be a whole lot better, a whole lot nicer. I'd sleep better at night if we got a more substantial test of that $48 move level, $48 level before moving higher. One last chart and I'll be done. We've looked at this. This is also in log mode. Looks like I lost my label. I was expecting silver just to march on merrily higher. I had several mistakes in my analysis in recent weeks. Was not expecting China to get involved in an engineered price hike, or I'm sorry, price hit. I was assuming that we'd see different behavior from China. But anyway, it is what it is. Clearly price is, or clearly, in my opinion, price is dealing with resistance at this slanted resistance line. We can see this is back in the 2011 as the last bull market was topping out. Price interacted with this support resistance level, seeing the same thing again. And again, I no question in my mind that silver's headed up to this target zone and then higher from there. So anyway, that's all I got for you folks. Have a good one.